love the channel and find it useful in becoming a happy retiree. Subscribe today. Paul, what's going on?
Good morning, Wes.
Good morning.
Before I get my question out, I want to thank you and Ryan and the staff for this past year. It's been very educational and enlightening. So
thank you, Paul. Thank you. Thank you for saying that.
I'm sure I speak for many other people. My question is for 2018. Obviously, everybody in the last, specifically this past year, and it's been coming on for about the last 2 or 3 years, the Bitcoin quote craze, unquote. How do you see that affecting the market in general? Because there's two schools of thoughts, and a lot of it's generational too. But how do you see that as far as affecting the market, if it affects it at all?
Well, it's got to be the point where it's not insignificant anymore.
Correct.
Right. The market cap, it's grown so much that it was a few $1 billion, and then it was 10, and then it was 50, and all of a sudden, depending on the day, and it fluctuates so much, it can be 250 billion, 350 billion, depending on the day or the week, because it is so dramatically volatile. I would say it would be foolish to think that it doesn't have any impact on equity markets, bond markets, currency markets, you name it. And I have part of that as my 2018 outlook. So here's my thought, and this was a great call, and I know that there's a lot of question about Bitcoin. And of course, there's been this craze in the last couple of years, and I've never seen a parabolic chart like we've seen with Bitcoin in 2017. And it reminds me a lot of 98, 99, where you had dozens of new startups, or every day you'd hear of a new startup company getting either a big chunk of venture capital or seed money or VC money, crazy valuations, crazy stock charts when they went public. And that was the late 90s. That happened really on a daily basis, over and over and over again. And it's kind of like what we're seeing today with Bitcoin and then all the other follow-along currencies that are coming beyond that. Ripple Ripple, which is an example of a company that has another cryptocurrency, Litecoin, Ethereum, you name it. Because remember, these are manufactured by algorithms. They're not metal. This is not backed by gold. It's not backed by the U.S. government. Anybody can create an algorithmic-based cryptocurrency, literally like overnight. Can happen like tomorrow. So when you get a craze like this and you have virtually no barriers to entry, you get a ton of competition, a lot like when money was essentially free in the late 90s. And that's what this reminds me of right now. This wave of capital that's chasing something that most investors just can't really define, hard to value, let alone understand for most people, or reasonably value. And the Bitcoin, in Bitcoin's bull market perspective, or if you're a bull, you say, hey, look, if it was overvalued, then the bubble would burst, which oversimplifies what happens in markets. There are lots of times in history where you get this irrational valuation, and it lasts and it lasts and it lasts longer and longer than you thought should last. But meaning that the bubble it's gone way further than most people would have ever thought, and it could continue to do so. But it might start to, at some point, I really think you'll see a day of reckoning with this. And remember, when the tech bubble finally burst in March of 2000, remember, it inflated for many years in the late 90s, and then 98, and then it got crazy in 99, and then it wasn't until March of 2000 when the carnage really started. And then you saw lots of venture capital funded firms go insolvent very quickly. Six months, and they're out, 9 months, gone, and they just simply disappeared. Companies that had zero earnings in the public market went bankrupt. Even, and this is where I think the analogy really takes hold, even blue chip names in technology like Cisco and Intel, these are companies that are still thriving to this day. During that period of time, caught up massively in the downdraft. So if you look at go and look at a chart back in this same period of time for Cisco and Intel. These are companies that dropped 80%. Cisco, Intel, 60%. So even these really solid companies with real research budgets and real business models and real earnings dropped 60, 70, 80% of their value because they got caught up in what was the popping of a bubble. I think you could see a similar story play out with these cryptocurrencies, much like happened in the .com period of time. The technology didn't die, and Bitcoin likely will not die because it's now the kind of the grandfather of cryptocurrency. So it'll probably stick around. And of course, the underlying technology is what really will stick around, which is blockchain. And that is going to be used in many other areas besides these currencies. It's being used in big companies like Intel and IBM. But it doesn't mean that the coin itself or the latest cryptocurrency startup won't see its valuation get hammered or fizzle out completely. There will be many of these things that just disappear when the bubble finally bursts. I don't know when it's going to happen. Could happen next year. Something to watch for in 2018. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.